This is episode 64 of the Rohit Radio Show. I am your host Rohit. This is the second part of the three-part video series that I am doing on the topic of investing for beginners. In the first part, we looked at real estate as an asset class. In this part, we are going to look at business as an asset class. Let's begin. Now, before we get into the topic, I want to invite you to come and attend my free Financial Freedom Masterclass, in which I teach people how to escape the 9-to-5 rat race in less than 5 years. The masterclass is 100% online. It is free. You can do it from anywhere in the world, anytime you want. I will put the link in the description box below. Go check it out. It will help you. Thousands of people from all over the world have already done this masterclass. So definitely it will add a lot of value to you. Coming back to the topic, this is part 2 of the three-part video series on investing for beginners. Last week, which is part 1, we discussed about real estate. We spoke about 4 asset classes: real estate, business, commodities, and paper assets. In part 2, I want to discuss the second asset class, which is my game, which is business. Now, when it comes to investing in businesses, there are 2 ways to look at this. One is you can invest in your own business and you can invest in other people's businesses. Let's talk about investing in our own business. Now, when I say investing in our own business, there are again 2 ways to look at this. One, I can either invest my own money in my own business, which is what I do, by the way. I invest my own money in my own business. That is why I don't invest in mutual funds, correct? Because I like business as an asset class, because the return on capital is more in business. So when we look at business, there are 2 ways: my own business and other people's business. Under my own business, there are 2 ways. I invest my own money in my own business, or I go out in the market with ideas, with a project plan, and then I raise capital from the market. So I invite other people to invest in my business. So there are 2 ways I can run my business: with my capital or other people's capital. When I'm working with my capital, that's a solopreneur kind of a business, which is what I do. When it comes to raising capital from the market, that is where we are talking about the world of startups. That is where people invest their time, their energy, and ideas into a particular project which they care about. They take this idea to investors, angel investors, venture capital, and things like that. And then they raise capital and then they build multi-billion-dollar businesses. By the way, this is the high road to riches. You can even become a billionaire by creating a loss-making company, which is what I see happening in India these days. Everywhere there are unicorns. So startup is a very high risk, high return kind of an investment. What happens in startups is that out of 10 companies that start, 9 companies fail in the first 5 years of its operations, and the remaining 1 company that is again likely to fail in the next 5 years after the first 5 years. So the failure rate is very high, but then again the reward is also very high. So that is the way you start your own business, either with your money or someone else's money. The other part of business is you invest in other people's businesses. So again, there are 2 categories here. One is you can invest in a private company or you can invest in a public company. Now, when it comes to investment in public companies, here we are talking about the stock market. The advantage we get here is we can get exposure to high quality companies which have been in the market for decades and are doing very good business. So for example, even if I have, let's say, $100 to invest, I can buy a couple of shares of a very good company, let's say Britannia or Gillette or Marico or Asian Paints or companies like this, which are very strong companies. I can take exposure to these companies with very small amounts of money. I can't do that with private businesses. If I want to buy a private business, I need to do a lot of due diligence. It is likely to be an over-the-counter transaction. Say, for example, somebody wants to sell their grocery store, somebody wants to sell their warehouse, somebody has a laundry house, they want to sell their laundry house, somebody wants to sell their office space, somebody wants to sell their library maybe. So there are all kinds of private businesses available out there. In the newspaper classified section, you will find these advertisements where you can buy private businesses. But there again, you have to do a lot of due diligence. Then you have to count the inventory. There should be a level of trust between the buyer and seller. So it's a fairly large transaction. It might take months to materialize. But when it comes to investing in public markets, I mean, it's very easy. If I want to buy a couple of shares of Britannia company, which manufactures biscuits, and it doesn't take much time for me to do that. Within a couple of clicks, I can buy a couple of shares of this fantastic company. So again, let me summarize this for you. First asset class is real estate. Irrespective of whether you have money or not, you can invest and make money from real estate, which we looked at in part 1. In part 2, which is this one, we are looking at business. When it comes to business, there are 2 categories: my own business and other people's business. Under my own business, I can either run the business with my own invested capital or other people's invested capital, which is what a startup is basically. When I talk about other people's businesses, there are 2 categories again: private business and public business. It's easy to buy a public business with small amounts of money by becoming a minority shareholder in fantastic companies. Private business, that is an area which requires a lot of knowledge and capital as well. You cannot buy a private business for $100. The chances are very low that somebody would sell you their grocery store for $100, or somebody would send you a part of their grocery store for $100. That doesn't happen in the world of private businesses. So that's what I wanted to talk about, the second asset class, which is a business. And this is my game. I like this asset class because here I have control over the cash flow. Since it is my business, I have control over the spending, I have control over taxes and things like that. Because I have control over my asset, I like this particular asset class. So please consider this asset class. The richest people in the world start with this asset class, which is a business. Then they diversify into paper assets and commodities and real estate. If you look at Robert Kiyosaki, he started with business as an asset class, but people think that he started with real estate. That's not the case. Yes, he started with real estate, but he looked at every real estate deal as a particular business model which can help him generate cash flow. So in his mind, he was starting a business. He was not buying real estate. Okay. In the third part, which is the last part of this video series, which is next week, we will look at the remaining 2 asset classes, which is paper assets and commodities. I like commodities more than I like paper assets, and I will discuss that in the third part. Anyways, that's what I wanted to cover in this particular episode. Don't forget to subscribe to my free Financial Freedom Masterclass. It is 100% online. If you want to achieve financial freedom in your life in less than 5 years, I think this masterclass will help you. You can do it anytime you want. I will put the link in the description box below. Thousands of people across the globe have already done this masterclass, so I can assure you that it will help you. Click on the link in the description box, put your details, you will get your login ID and password and all of those things, and you can start learning from there. Thank you so much for your time. I will see you in the next episode.